I've helped her and I've talked to her about, her lease and what's going on there and her landlord and how to negotiate. We just went through COVID. So there were so many things that happen to these small businesses. When you have transparent conversations, they know you're an agent.
Right.
That's an opportunity right there. So number two, you have to market. Just like you got to scream at the top of the rooftop that you're an agent and you can help people buy, sell, and lease and all this other stuff. You do the same thing. You're just directing it to a different source.
So what about, for people that just want to get into investing into commercial properties, what are you looking for them to come to the table? Is it a proof of funds? Is it a pre-approval? Is it a syndicate? Like, what if I want to buy a building, what do I need to have and have ready when I come to talk to you?
Well, like any other agent, I would ideally want you to have a pre-approval, right? So whether it's from an established commercial lender, a hard money lender, whatever it is, come to me with that. Also, come to me with an understanding of what you want to buy. The biggest thing is people assume, oh, I want to invest in a real estate, and they think about huge assets. They think about the big things. There are smaller ways to get into the business. Buying a retail storefront, I'm learning so much more about myself these days, is a great asset to leverage. Go to a bank if you have a great tenant, be able to have that tenant pay your rent for the long term without you necessarily having to worry about the cost of maintenance, because it's a net lease. So you own the asset, but the tenant essentially covers everything. So like things like that, I think you really have to educate your client on. But if they're a sophisticated investor, or they have a bunch of money, or actually another thing I recommend is your friend groups, right? If all three of your friends have 20,000, right, to put down. Sometimes it's better for you guys to invest in an asset right across the water in New Jersey, right, as opposed to in Manhattan or up in the Bronx or, a little bit further into Long Island. That way you guys can get a 3, 4,
get
maybe even 5 years. Get some cash flow, understand the process under, a little bit of structure and a little bit of protection, because having the biggest thing about a commercial asset is when something breaks, that cost is not fun, right? We own a property and there was a water main break in our property. There was a flooding all throughout the whole property, all 4 units. That was not fun, and that's a huge cost. And as an individual getting into the business, you don't necessarily think, oh, well, it's the winter time, pipes can freeze and all these other things.
And then in terms of vacancies, so when you're looking at a property, is that something that the bank considers when they're going to give you the loan? Let's say you have 5 units, mixed use, and 2 of them are vacant. Is that something that you would talk to your client about before they, decide to move forward?
Yeah, it's 50-50, because vacancies in New York City are actually assets. Like they're
okay.
in New York City.
Okay.
So you would naturally, people are like, oh, I want a vacant. Most of the investors are going to say, I want it to be vacant. Why? Because if it's a value add property, meaning you're able to help the property appreciate through renovations and other investments, then you don't necessarily want to deal with the tenants. You want the tenants to, have already vacated or relocated, or there's some guarantees that they will, because New York City, as we know, is a tenant state. So getting them out post-closing can be a little difficult, which is why I tell people to be very careful when they're buying things at an auction or foreclosure and things like that, because you don't know what you can end up with, right, sometimes. But, on the flip side, if it's a larger asset, if the property has a large amount of vacancy, but it's already up to date, but there's something just wrong, the bank is, of course, going to look at it with a little bit more scrutiny, because they want to know they're going to get their money back.
Right. And the commercial leases tend to be a lot longer, correct? So
traditionally, we want to start at 5 years, right? Okay. I've had clients, do 3 and things like that. But I always explain to people, you don't get a lot of value necessarily in a shorter term lease, especially if your lease has a good guy clause, right? So if you take a 5-year lease and you have a 90-day good guy clause, let's say it executes after year 1, you essentially have a year lease.
So
and then you have
to stop you again. We're going to talk about what that good guy clause means, because I want to make sure that everybody is following along. And thank you guys. If you have any questions, just drop them below and I'll try and catch them. But what does the good guy clause mean?
Okay, so when you are entering into a commercial lease for your business, most people just assume it's underneath your business. Unless you're an established tenant, a lot of times they need a good guy or a guarantor of that lease. So that's going to be the individual, the owner, and or the individuals or the group that are going to put their personal guarantee on the lease for a period of time. So the good guy clause is saying that, hey, you as the good guy, we're going to allow you, if something happens to the business, to be able to vacate the space free and clear after this amount of time. Now, a standard good guy clause can be 120 days, 90 days. It's all negotiable, right? But a lot of tenants don't think about that up front, right? You could just say, oh, yeah, I have a good guy, but you don't know how long it is before you can execute that. That makes a big deal. Like if your business is struggling, you don't want 120 days before you can vacate. You want to say, hey, I got 60 days of rent. Here it is. And I'm out of your rent.
You let me know. Okay. And so you're instrumental in all sides of this. Now, do you list more or are you on the buyer side or do you find that it's pretty mixed?
So it's about, I would say 60-40, right? With me, my business, I represent a lot of fund managers, so which is a little different. So a portion of my client base are funds. Then they raise money to acquire assets. So when I represent them, 90% of that is going to be off market. They don't want a lot of scrutiny. They don't want a lot of people knowing their business. So these people generally are going to identify things off market because a lot of times those are sometimes considered to be the better deals. They're going to have more value add potential. They may have some financial challenges and be ready to kind of move on. And or if we do go to market, which I do have some properties on market, that's generally because we want a premium price and we want to have a broader market look at this. So for me, my clientele generally, whether it's on the landlord side or the tenant side, we function the same, right? To me, it's always about a customized approach. It's always about giving people the highest quality service because they deserve it, right? Some people treat this client like this and that client like that, but that's not how business is really done, right? Because you don't know who people know, and you don't know where this is going to end up or how other people are going to react to you. And the world is very small. People might think there are 10 million people that live in New York City. That gets whittled down. That gets whittled down very quickly, depending on your relationships, the people you know, the access and the relationships they have. You'd be very surprised what kind of rooms you end up in.
Well, I have like 10 more questions, but we had a little mishap. But
take your time.
What I want to know is, because I did kind of find you on social media, can you just talk about the importance of social media, or does it have an importance in your business?
So for me, social media has become a tool that I have personally started to engage in more, right? Like I would say I was active. I had a different page, but I was very active on social media, just socially, right? I love to share and what I was doing personally and lifestyle wise. But I really started to consider and I watched people that I followed transform their lives and their business through social media. And to me, it's a free ad, right? And if you put the right information on your ad every single day, more people start to see it, more people start to engage in it. So for me, we have a comprehensive campaign when it comes to social media. So I post frequently. I'm always trying to meet people and engage people. I do have help doing that because it's truly difficult to do that by yourself. But, social media to me has helped so many agents, so many other businesses scale, meet a whole new group of potential clients and opportunities. And that's my goal. That's why I use it.
Never know who's watching. Right?
You don't. And if you're watching and you want to buy commercial real estate, give me a call.
Definitely give you a call. I mean, I've noticed that myself. Sometimes I put stuff out there and then I'll get a DM or an inbox or an email. Hey, they're paying attention. They have
And
questions.
yeah, and they don't even have to like your stuff, right?
No,
So like there's a lot of people
they
that
don't.
just quietly
Quietly.
sneak around.
Yeah,
They know everything you
yeah,
post. They know everything you talked about, but they
yeah,
didn't ever like
yeah.
nothing. Like, come on.
But one day though, one day they reach out and you're like, okay. And it's usually somebody that you know, maybe
Yeah,
not closely, but somewhere in that sphere of
absolutely. I've
influence.
gotten referrals from people that are in my network, from friends
Mm-hmm.
who have seen me years and years, and just one day something I said just
And it,
clicked, and they were like, "Oh, I need you to help this
yeah,
person with this," because they just like they know you, right? So they don't really think about what you do on a day-to-day basis. But when you're posting and you're sharing and you're really active, then it just they're like, "Oh, wow, yeah, can you help me do this or that?" That's kind of how
okay.
it happens.
Well, you talked earlier about a group of friends getting together, and this is
Yeah,
where I feel like it gets real because the app, we're not talking about big investors.
yeah,
I have 5 friends.
yeah.
We have $20,000, $30,000 each. We want to
Mhm.
buy a 6 unit something or other.
Mhm.
What are some of the things that we should consider as that group? As that
Well, before you do any single thing with any dollar, you guys got to get together with an attorney or an independent party and sign a partnership agreement.
okay,
Like, that's the biggest thing, because what happens is once you guys get into the finances and get into the nitty gritty things, stuff happens.
yeah,
People change, especially when other people's circumstances change, then it can truly impact the deal. So you want to know that you guys are going to be in it for the long haul. Number two, you guys have to have some sort of an exit strategy. So partnership agreement to establish, and then understanding of when you're going to exit and how you're going to exit.
right.
So the exit strategy to me comes second, because is this a buy and hold? Is this a buy and flip? Is it, what is the access to capital people are looking for? A lot of times when people don't have those conversations, the expectation of being able to draw out funds from the investment a lot sooner than necessary is just not transparent. So once you have those two things set aside, then it's how do you structure acquiring the property. Sometimes it's better for one person
Mm-hmm.
to get the loan, and each of you end up getting the loan based on what their income is
Mm-hmm.
and things like that. But that comes with trust, right? So if you're going to be the main party that's
Yeah,
putting down the information for the multifamily mixed use property loan, you want to know that person 2, 3, 4, and 5 are going to be there when something happens, or if you have a balloon mortgage and
mm-hmm.
things like that.
Mm-hmm.
You don't want it to be personally responsible. So that's where it goes back to the arrangement, the legal contract that you're going to have. Also, roles and responsibility in the group
Oh
in
my,
the buying process.
please tell me about that because I have somebody that asked. They're an agent
Yes,
and they're part of that group.
yes.
So as an agent that's part of that syndicate or that investment group, what
Mm-hmm.
is your role the agent? Are you getting paid? Are you doing your commission? Like how does that break down within the group?
I've had my own thoughts and challenges. Obviously, you want to help the group, right? So you want to be able to do it, but you are still functioning in your professional capacity. So
Mm-hmm.
I don't think it's wrong for an agent, if you're the agent in the group, identifying things and doing all the paperwork of the
Right.
transaction. You should be
Right.
compensated. Now, other people might feel some type of way. So maybe a percentage of that gets fed back into the investment, but there should be
Right.
some professional compensation for that.
Mm-hmm.
But just because you're the agent doesn't mean you have to be the person that's the property manager or the person
Right.
identifying the property.
Right.
Sometimes it's based on what you're really good at. Because some agents are just not good at
Right.
managing a bunch of stuff,
Right.
right?
Right.
So you might want the person who has Excel charts. They just love being on Excel. You want that person
Yeah.
to be the one putting together the budget and all this other
Yes.
kind of stuff, right? And that's, again, now we're talking about budgets. We're talking about, what kind of renovations. Let's say you buy an asset, right?
Mm-hmm.
It's a mixed-use property, has a retail storefront, and 3 apartments that are vacant upstairs,
Mm-hmm.
and you guys have to renovate it, right? What kinds of renovations do you want? Like, that's a part of that conversation. And then I feel like people should take a few months of talking to each other
before they just
move forward and
mm-hmm.
put their money down, because all kind of stuff comes in. So like for me, I'm like, oh no, I want the best. I want the best of the best. I want the best oven. I want the best, floors. I want the,
Mm-hmm.
for me, that to me mathematically is, oh, we can get a higher rent because we can appreciate that.
Mm-hmm.
But some people are like, oh, well, if we're only getting an extra $100, I'd rather get the cheapest,
mm-hmm.
the easiest.
Mm-hmm.
But someone else could say, well, then what's the maintenance on that? So those are all kind of little factors that have to be kind of considered throughout the process. And that's before you even signed, your name on the dotted line,
right,
the asset. Who's going to do property management? Who's going to get a call from these tenants when something goes wrong, the heat stops working?
And I think it's important that you
Mm-hmm.
you said that, because as the agent, you think, okay, so who's going to write the lease? Who's going to make sure everything is done? And you know how to do that, but how far do you want to get involved? So that is really, really good advice.
Yeah.
If you could talk about, and I'm not sure if there's a difference. So this is my question. The difference between return on investment and the cap rate,
Mm-hmm.
or are they the same thing?
So depending on the asset you're buying. So the cap rate is calculated based on the net operating income is NOI, right? NOI, right? So when you calculate that return on your investment,
mm-hmm.
You're looking for essentially what is the rate of capital, right? What was the appreciation of this capital when I put it into this investment over this period of time on a monthly annualized or annualized?
Is that your initial investment, or is it the purchase price of the property? So is that cap
rate? So
it's
the total investment into the property. So it could be a purchase price as well as your renovation costs and all these.
Got it.
So unless so depending on what kind of asset you're buying. So like right now, investors are looking, like an investor wants to buy at a higher cap rate. So you'll hear the numbers, oh, I want to buy at a 6 or an 8 or a 10 cap, right? That means there's more of a gap between, like if you're buying it at a 2 or 3, the property's likely already renovated. It likely has already seen a lot of the appreciation that it can see. And the income has kind of stabilized. When you're buying it at a higher cap rate, that's when you're seeing more opportunity to increase the income, increase the potential in the simplest form, right? So like I have investors that have acquired assets, and a way of reducing the net operating income or lowering the cap rate is getting a J51, right? So that's a tax benefit on a property. If you have stabilized units, that'll lower your taxes on a property. So things like that can impact your return on your dollars and what you can eventually pay out to your investors.
Now, is that part of your job as a commercial real estate agent, or do you expect people to come to the table already with that or some basic level of knowledge, or are you breaking it down for them?
So is it part of our job? It can be. So for my newer investors, for my smaller groups, absolutely. I will explain it. I'll do the math for them. Like I've done the math on a client's return by, taking seller held financing as opposed to getting a loan somewhere else, and what the net cost is going to be. Things like that. Is it generally required when you're working with established clients? No.
Okay.
Most of these guys have their in-house numbers. They have their own. Most of these guys have a formula, right? And they're going to put it into their little Excel sheet, and it's going to spit out what their profit on this property is going to be. And if it doesn't make sense, per square foot wise, it may not be the ideal investment.
And they just move on.
Sometimes I'm the one, so that's where an agent comes in, right? So I'm representing a deal right now, and a big part is my clients, as usual, want their price, and my buyers want their price. Where an agent comes in, why a lot of people necessarily may not value or understand the value of an agent, this is all a relationship thing. When people want to buy an asset, the asset is important, but it's the experience of the transaction that sometimes helps people along. So for me, I take time. I get to know these buyers. I talk to them frequently. Like I have a buyer right now. I talk to him every single week, once a week, at least for 20 minutes. And we're catching up. I toured a property of his. Like, why? Because I'm understanding what his return needs to be. I'm understanding what his challenge or where that gap comes in. To close that gap, I am literally educating him on, hey, did you know you can go free market if with this type of opportunity? And this, so like there are a lot of things as an agent you have to learn to bring value to both your sellers and your buyers. That's where we really are important. You know, sometimes the mathematics is just math, right? So a lot of people already have it. The banks also have a lot of impact in there if they're getting a loan. So you may have a mathematical equation, but the mortgage lender might say
something else.
Well, no, that's not the number we have, and we're gonna rate this property. You know, you've experienced in a residential where they calculate what the numbers they're willing to give on each property, right?
So what are what are the challenges that you face? You talked about briefly about being a female and a Black female in commercial real estate. So what are some of those challenges early on? I'm sure now it's kind of not as much.
It's still there. I can count on one finger, how many other Black women I've transacted with.
Well, here's the real talk about. Tell us about it. Tell us about it. One.
In 19 years in commercial real estate, I have been on the other side of the table in a commercial transaction with one other woman of color. She's at a bigger firm. Sorry. So she's at a bigger firm. She's run her business, but it's not a lot of us. And not to say that is a big issue, because I think also people are attracted to things they're comfortable in. I also talked about in the last, show you're mentioning, I am not afraid to be where I don't look. And people, if you continue to go places that only serve you because you're comfortable, you're going to stay where you are. That's like saying, I want to be a millionaire and all your friends are 100,000aires. I want to be a billionaire and all your friends are thousandaires. Like you're not gonna make it to the next phase unless, like for me, I challenge myself to go to places that may help me learn something new, whether it's the same thing, things like that, and I help me meet someone new, help me meet other people that can teach me something. Because in this business, because a lot of people have not looked like me, I've been taught and put on to stuff by a lot of other people. But again, there are, like any business, there are people who are going to be your advocates, and there are people who are going to be and so you have to be also real. Like one thing I don't talk about, I've had to check agents. I was challenged one time on my listing agreement. We had, they were representing the tenant, I was representing the landlord, and in a commercial lease scenario, you have what is called a commission schedule. And at the time of payment, generally, you're not going to have your client pay this other person. You're going to have your client pay your company, and your company is then going to disperse the funds to the other person. Because, again, you don't want them to have your client's contact information, because agents are agents. So I was challenged on the terms, and he wanted to see my listing agreement and all these other things. And I had to say, whoa. You would never ask this other colored broker for his listing agreement.
So almost like he wanted you to validate that.
Yes, he wanted me to validate who I was, because he didn't feel comfortable with me as the person in charge, which is, again, as a woman of color, we've dealt in those scenarios where it's like, oh, who's your boss? Are you the last person I have to negotiate with? Yeah, absolutely, I am.
I think you have to set the tone early.
You do, but you can do it in a nice way, in a professional way that also clearly defines your boundaries. Like for me, I'm a hardball negotiator. Like for my clients, I will fight till the end, and I'm going to get them an amazing deal. But I'm also going to, like just I said, your relationship with your clients are important. Relationship with other brokers are important. Sometimes they will blackball you. They will not let you show your clients the property. They will not let you have access. And of course that happens in this business because I would say 60 to 70% of commercial leases or real estate that are sold in New York City trade off market. People are not going to walk around telling you, hey, I have this 54 unit property in the Upper East Side ready to trade. Nah, they're not going to do that because that's not in their best interest unless you're a part of that circle, which is why I want more women in this business, which is why I want more people in this business, because then it becomes normal. Then you normalize this, and then the competition makes people have to work harder because there are a lot of agents in this market and in this commercial business, which is a little different from residential. Again, I call them listing collectors. They get a bunch of listings, they sit on them, their names are on them, they've been in business 100 years, which is wonderful, but are you trading?
Yeah.
Are you closing?
Yeah.
You know, that, so you start to change it. You start to challenge what they're comfortable at. You start to get photos on listings online.
Right.
Yeah.
So I do want you to have a chance. I know you have a podcast and you have a lot of other things going on. So I just want, and thank you everybody. I mean, we have people coming in and out, and hi David. Thank you for joining us as well. People are just giving you kind of, claps,
guys.
So they appreciate what you're saying. So I want to give you an opportunity to just talk about some things that you have going on personally and where people can connect with you if they have some questions after this live is over.
Okay, yeah. So you can generally find me at Cyn Realty, CYNREALTY, on the internet. You know, whether it's Instagram, Facebook, LinkedIn. I'm big on LinkedIn. If you guys aren't really maximizing,
tell them.
Get in those DMs. Get in those, like, so people always talk about it goes down in the DMs. It really does. Like, you gotta get in there. And so, find me online. I have a booking link on my Cyn Realty Instagram profile. I offer anyone the opportunity to book 15, 20, 30 minutes with me. Pick my brain, ask me questions, you know, look at a property, you know, whatever it is you want.
And you're not over the bridge, so you're just in New York right now, right?
Yeah, I'm in Manhattan. I live in the Upper East Side, but my office is in Midtown, so... Yeah,
I'm gonna have to come check you out the next time.
Let's have lunch. Let's have
Serious.
A drink.
I'm gonna hold you to that. Definitely, because I still have, and you know what? And I'll reach out. You know, maybe in a couple of months we can have you back because you know half an hour is a short period of time, and there were so many things that you touched upon. And actually, if anybody's interested, it was just tagged in the comments at Cyn Realty. So definitely follow her. Reach out, send her a message if you have some questions, because this isn't a space you hear a lot about, not just from a woman of color, from a woman, period. So I appreciate you being here and taking the time to give us a little bit of insight onto, you know, what is, your podcast. I do want you to have a chance to talk about that.
My podcast is launching. We are working on our first few episodes. We're going to creep it out probably by April at the latest. It's called Close on Purpose. And the biggest thing about this is, like, I want to bridge my passions for entrepreneurship and real estate and have people share their experiences. But at the end of the day, talk about what their bigger purpose is, like why they got into this, what was the driver, what was their why. Close on Purpose on Instagram as well. And like, hit me up, get in my DMs.
Okay, you guys heard it here. And I want to thank everybody that kind of stayed with us through the challenges of the technology. I really appreciate
it. Worked out.
It did work out. Thank you. And Cynthia, I will definitely reach out to you soon. Everyone else, I do have a very special guest next month on March 7th, and I will be releasing that next week. Oh, and I did tell everybody on my last live that I had a big announcement that I was going to make this time. And if you haven't seen it, I did recently receive my PA license. So your girl is licensed in Pennsylvania. Thank you.
There's a lot of investors have gone to PA over the last 3 years. I know a lot of people investing down there.
Okay, so we need to talk and do lunch, but I'm very excited to be open to a new market. I actually live on the New Jersey Pennsylvania border.
Oh.
So it just made sense. But who knows? Maybe New York's next. You never know.
Well, come on over across the river.
All right. All right. So everybody, we're going to go ahead and sign off. Thank you for joining us. We appreciate it. Bye, guys.
Bye-bye.
Oh, no. I'm trying to end it. There we go.